How to trade the stock market open. What's up guys, welcome back to my channel. So in this video we're going to talk about how to successfully trade the market open and to stay consistent. But just before we begin, if you're new to this channel, make sure to like, share and subscribe so you don't miss out any future content. Without further ado, let's get straight into the video. So traders, as you can see, this is a stock called NIO. The ticker is NIO, Electric Vehicle Company. Okay, the first thing we're gonna need is a 3-minute time frame. So each bar that you see on the charts here represents 3 minutes of trading. The second thing we're gonna need is a 20 EMA, this blue moving average, as you can see here that I've highlighted. And the third thing we are going to need is a 200 EMA, this red line right here. So let me explain why we're going to need these three things. So first things first, 3-minute time frame. The reason why we want to trade the 3-minute time frame and nothing below it is because there is a lot of noise when you go lower and lower. So when you go below 3 minutes, it becomes very noisy. What I mean by noisy is each bar on a 1 minute or 2 minute is very choppy and very hard to predict where the price will go, especially at the open. Okay, the higher the time frame, the easier it is to read charts. Okay, especially at the trading open. So that's the first thing we're gonna need, a 3-minute time frame. And then we're gonna need a 20 EMA. The reason why we're gonna need a 20 EMA is it is a lagging indicator. Okay, so I don't suggest you just trade just off indicators, but a 20 EMA shows us trends, guys. Okay, shows us if we're in an uptrend or a downtrend. So it's just nice to have it on the eye. Okay, and then a 200 is the main moving average we use for support and resistance areas. Okay, especially when day trading, you're going to need these key moving averages. Okay, they act as a lot of support and resistance. So whenever price pulls towards the 20, if we're in a downtrend, as you can see, it gets rejected. Okay, and then a new trend begins. As you can see how it holds the 20 EMA. Okay, support resistance areas. So this is a stock of NIO, as I explained to you guys. So the purpose of this video is to show you guys how to trade the market open, especially at the open, because that's when the most volatility is and where the easy money is made, guys. Okay, so look at the difference between the actual open. Okay, look at this move this NIO made. Okay, and this is not some old charts I'm showing you. This happened right today. This happened today, okay, at the open. So you tell me where the easy money is made, in this area here or afternoon trading. Look at the difference, guys. All right, power move, and then the stocks just begin to just trade sideways pretty much, okay, throughout the day. And this happens each and every day. Okay, this happens every single day. So you don't want to be trading in here. In this chop, you want to be trading in here. Okay, and this typically starts and finishes in the first hour of the trading open. Okay, so you want to capitalize off that open and move on. Okay, less is more. All right, traders. So what I want to show you guys is a strategy that will pretty much change the way you trade and think. Okay, so as you can see, this was yesterday's closing price. This morning the stock gapped down, excuse me. Okay, in this area. This was the opening price, right? This line. Okay, so you can see the stock opened. It had a pop up towards 200. And what did I say? The 200 acts as support and resistance. So does the 20, but the 200 is the main support resistance indicator you want to pay attention to when price goes near it. Okay, and then we had this tail bar. Can you see this topping tail bar? All right, that tail indicates weakness, guys. Okay, of the 200. And as soon as that occurs at a moving average, especially the 200 at the open, you want to try and get short into this. Remember, stock gapping down is more likely to continue lower. Okay, so there's your first rejection, that red bar. Okay, you can even take it early in here, stop above the high. So you look at your risk to reward, guys. Your risk to reward is pretty much 10 cents to make all of this. Okay, that is huge. Okay, okay, so you could have entered at these lows, stop above this red bar, could have got 3, 4 to 1 on your money. Okay, and move on. Okay, and this happens each and every day. You just have to be there to spot it. Okay, I want to show you another example today. On a stock called AMD, guys. Okay, some of you probably know this stock, AMD. Okay, so as you can see, trading open. You get this. This is the 3 minute, guys. Okay, each bar represents 3 minutes, and you get this big push at the open. 3 minutes. Okay, you wait and do nothing the first 3 minutes. Let the stock and price reveal itself. You don't want to be chasing. Okay, the first few minutes are very dangerous to trade, but also the most profitable. So you want to just wait for the stock to reveal itself. There is no rush to take a trade. Okay, you get this big green bar, guys. Okay, and where is it? Breaks above the 200 EMA, the red line, and the 20, guys. Okay, so once resistance breaks, it becomes support. Okay, and the next bar tests this 200. Can you see this test, this wick? Okay, rejection. Could have entered in here, you could have entered above these highs, and look at this push up, guys. Right, a 1.5. A 1.5. Okay, so you look at your risk to reward, guys. Risk 50 cents to make a 1.5. Okay, that's 3 to 1 risk to reward right there on AMD, guys. And can you see how this 20 acts as support? Once it comes in, tests, bounces, then breaks through. Okay, this is very crucial, and this happens each and every day at the stock market open. And I do suggest you guys trade a handful of stocks, not too many. You want to be trading 3 to 4 stocks so you don't get confused, guys. Okay, don't trade too much stuff. The more stuff you look at, the more you're gonna just miss opportunities. Okay, so just stick to a few stocks each and every day. Okay, and I do suggest to trade large cap stocks or even mid cap stocks, because that's where real money is made. You do need a bigger account size to trade them, but these are very liquid stocks, and you can trade them each and every day at the stock market open. Okay, and you're done. The first hour, you're finished trading, guys. You don't need to over trade, because what happens throughout the day, right? Once this and this move is made, then look at this grind. It's just a grind. Okay, so you don't need to over trade, and this pretty much happens on pretty much every stock. You look at United Airlines, right? Yesterday's close below the 20, the 200, gap down. Okay, remember, you can be buying the weakness on gap downs. That is a good idea, but if the setup is there, if there's no setup and weakness at the open, you want to be shorting these. Okay, look at this thing. I dropped a 1.5 at the open. United Airlines. Okay, wait the first 3 minutes. Let the stock reveal itself. If it's showing weakness, getting short, guys. Okay, I'll show you another example. CCL, this is another cruise line stock. Same thing, right? It was a bit choppy at the open, as you can see here, but that's fine. Okay, as soon as this low gets taken out, right, there's your drop. It's all about risk to reward. If you want to be a profitable trader, you want to be aiming for 2 to 1 at least. So you want to risk $1 to make $2 to stay in this game. Anything at 1 for 1, so if you're risking $1 for 1, you're gonna have a hard time. You're gonna need a higher win rate to be profitable. Okay, you're gonna need a win rate above 80% at 1-to-1 risk to reward to stay consistent in the markets. At 2-to-1, you only need to be right 50% of the time to make money. Your break-even point is to be right just about 40% to be break-even, guys. So 4 out of 10, can you manage that? If you can't manage that, you shouldn't be day trading. Okay, so this is pretty much the tip and tail of how to trade the stock market open. Be patient, let the price come to you. Use a 3-minute time frames, plot in these 2 main indicators, the 20, the 200, and just wait for price to come to you. Simple as that, guys. Okay, so this is gonna be it. I hope you guys enjoyed this rich content. Hope you learned something new. If you did, make sure to leave a like, subscribe, and comment below of what you think. Okay, so thanks for tuning in, and I'll see you guys next time.